Now let's stay in Kenya. The central bank has begun pushing for stricter regulations on the operations of digital loan platforms in the country. The Apex Bank says it now wants to bring them tightly into the fold of the National Payment Systems Act. CBK Governor Patrick Njoroge recently told Parliament that digital loan platforms needed to be reined in, as a majority of Kenyans have become enchained to these platforms. A recent report by Jumia found that there are currently over 25 digital credit providers in the country, with new services being launched continually. Well, there are companies on ground working with growing default rates and over-indebtedness in the country, trying to make the situation better. And Credit Info is one of them. Joining us in the studio is Seth Marks. He's a regional director for Credit Info. Very welcome to the studio.
Hi. Thank you. Thank you.
Now, as you just heard there, it's becoming a big issue in the country, this issue of indebtedness, growing indebtedness, of course, and growing default rates. Do you think the solution to this in Kenya is stricter government regulations going forward, or a better screening of customers?
I think the answer probably lies in a little bit of both. And I probably should not talk bad about the regulator, who's also our regulator, and I think play a vital role in the market. But I think any regulation is natural in this industry and really in any industry, especially in the kind of nascent phases of this industry. But I think ultimately the solution will come from the private sector and from players like Credit Info, really to help lenders conduct best practices in terms of credit risk management and lending. And then I think secondly, really what is the long-term solution is that all the stakeholders in the ecosystem, so CBK being one of them, Credit Info, and the lenders themselves come together in collaboration and really drive home consumer awareness and consumer education around lending and around credit. Long-term, that will be ultimately what is best for the market.
Now let's talk a bit about those best practices. Now Credit Info is actually helping these online lenders in Kenya. You're creating solutions to help them get better at identifying the customers. How? Tell us how you're doing this.
Sure. So I think firstly we can break down the customers into existing customers and new to lender customers. So I think if we start off with existing portfolios, what we see often is that lenders don't manage those portfolios as optimally as they could. So I want to treat my good customers a little bit differently than my not so good customers, or let's say bad customers. So to apply different approaches to those and to try to cross-sell and upsell effectively to those good customers so that it benefits them and ultimately the lender themselves. And then if we look at new to lender customers, so how do we onboard the right customers? How do we target the right new customers? And then in terms of making a yes or no lending decision, how are we making those decisions? What data points are we using? And if it's a yes lend decision, are we applying, for example, risk-based pricing or risk-based loan assignments, meaning that if my data and my credit scoring models say that this is a good customer, then I might want to start him off with a higher ticket size loan than a customer that my model says this is a less than good customer.
Right.
So don't apply a blanket approach, but apply a tiered and sort of segmented approach.
And you're actually introducing some of those solutions here in Kenya.
We are.
Can you give us an example of one of those programs, I don't know if that's what you call them, that's sort of helping to better that process?
Sure. So I think firstly is an automated decisioning platform, so that much of the decisioning that's happening and that we are advising customers to do more of becomes automated, it becomes objectified, as opposed to leaving it to a very manual, subjective decision-making process. So firstly is just this platform that allows you to automate and objectify any decision. And then to complement that is the data that is coming into that. So using, of course, the credit bureau data, because as a credit bureau, you're privy to a wide market range of data that an individual lender is not privy to himself. And then also using telco data, we also at Credit Info have a psychometric scoring solution. So we actually look into the core personality traits of a borrower, sorry. So the lender, in the absence of any other information, can make at least some decision based on some empirical evidence.
Now, what are you doing in countries such as Tanzania, where we're seeing people have multiple identification numbers, and it's pretty hard to get that data correct? You say you've come up with a solution in countries like this. How does that work?
Yeah, so
for the layman.
Sure. In Tanzania, it's challenging because unlike many markets, there's no unique identifier. So a social security number or a national ID that is unique to me does not exist in Tanzania. There's 6 or 7 forms of IDs. So what we have done is created automated integration into external data sources. So the Revenue Authority database, the National ID database, the database of driver's license, as well as the database for all registered SIM cards in the country. And then we use artificial intelligence and build algorithms that try to match all of those different data points to try to ultimately end up in a unique match.
All pretty interesting stuff and pretty complicated stuff as well. But thank you so much for joining us in the studio.
Thank you for having me.
Hopefully you'll come back and tell us a bit about how it's working. Of course, that's
Please
Seth
invite
Marks.
me.
Yes, Seth Marks, Regional Director at Credit Info, joining us in the studio.